Hey guys, welcome back to my channel. This is Aman, and I have let me just tell you about myself before starting this video. So I have over 2.5 years of experience in financial services sector, specializing in financial modeling, valuation, investment analysis, and algo trading. Okay, so these are my expertise. So let's just start with this video. In this video, I'm going to um, tell you about what is financial modeling and what are the use cases of financial modeling. And at the end, we'll see the uh, Excel model for a small business, how the financial modeling actually works. Okay, so let's start it. So you can think of financial modeling as a crystal ball, like like this crystal ball in the picture from the Harry Potter picture. So it's a crystal ball that tell you the future of the company in terms of finances. Okay, it's like that. So by using financial modeling, you can forecast the profit, you can forecast the cost of the business, you can forecast the free cash flow, the cash flow of the business, and other things. So financial modeling helps you to predict the future in a very systematic manner in which you use some logic, you use the math, you use the current data about the economics, about the industry. For example, you have seen Shark Tank. They tell you about the sales of the business would be this and that after 1 or 2 years, and we are projecting that. So they basically come up with those figures by using financial modeling. Okay, it's that. Or the super useful, it's super useful for like investment banking, corporate finance, and a startup valuation. Okay, so it's like three kind of things, but we can also use this in our investment analysis in our small businesses. If you have some business and you want to you are about to make a significant investment in the plant and machinery, you want to calculate something like would that machinery be good for the business or not, and you want to do some analysis about your loan and interest, basically your budgeting, yeah, budgeting and forecasting. So you can use that in your business also. So financial modeling is not only for like investment banker and corporate finance guy. You can also use these financial modeling techniques so that you can analyze your business in a better way. Okay, so what's inside a financial model? So most of the time you will see that there are three things in a financial model. The first one is income statement. So those of you who don't know what income statement is, I just want to give you a brief about this. So income statement, it's a statement in which you will list all the expenses and all the revenue of your business. For example, if you are selling, say, a water bottle. If you are selling a water bottle, like you have sold 100 bottles for 100 for 10 rupees, then your revenue would be for the year 1,000 rupees, and then you will list your cost in that, and then after that you will list other expenses about like finance if you have taken the loan for the business, and then you will pay some tax on it, and after that you will have your profit after tax. So that's your income statement. You list all the day-to-day expenses of income for your business. And the second one is balance sheet. Balance sheet is basically where you list all of your assets and the liability of the business. For example, if you have the loan for your business, you will list that loan here. And the interest part is because interest part, it's a yearly or quarterly thing that you have to pay um, on your loan. That interest part you will show that in income statement, but the amount amount that you took as a loan, you will list that amount in the balance sheet. Okay, and if you have machinery, if you have big investment on your assets, then you list all those things here at balance sheet. And then we have cash flow statement. So in easy terms, a cash flow statement lists all the activities related to your cash. For example, if you buy a asset, you will pay that cash for that. That cash you have to record that in your cash flow statement. If you are buying some raw material, then you have to list that in your cash flow statement. So whatever goes in and out in terms of cash, you have to record those things in your cash flow statement. Okay, the fourth part is assumptions and drivers. So basically, the fourth part is basically comes into the picture to support these three things. Okay, so we'll talk about this one, assumptions and driver, in another video. Okay, so this is it on different types of financial models. So we have DCF model in which we do discounted cash flow model, discounted cash flow model. Okay, then with second we have merger and acquisition model. So this merger and acquisition is very famous in investment banking. Whenever a target company buys another company, they have to do merger and acquisition model. And the second one is LB model, which means leverage buyout. Whenever a company buy another company with the help of a lot of then they have to make a LBO model to see whether the company uh, able to produce enough cash so that the debt that the another company took to buy that company would be able to serve that debt easily or not. Fourth one is comparable company analysis, in which we take, like for example, I've taken ITC, and then I'll take peers of ITC, HUL, Marico, Dabur, other companies, and then I'll do the comparison of these companies, and I can make a model out of that also by using some ratios and other things. Okay, the fourth one is budgeting and forecasting model. This one is very common in all types of company. For example, if you are working in Zomato, you have to do the budgeting. What would be the cost of your delivery partner? What would be the cost that will go to your server or your or apps uh, your internet cost and all. So you have to do the forecasting for that. So these are major five types of model. There are other types of model, but that's not very common for us. That's why we will not discuss that in this video. Okay, so this is in and now let's take an example of a financial model. Uh, yeah. So now let's work on this model. So it's a library business financial model. It's a small library. For example, let's take it as a case study. So you want to open a library in your locality. It's a local library. There will be no books, but it's like a study center where the students can come and study. Okay, it's like that. So we have to make some assumption and we have to do some analysis. What would be the fee for this, the subscription fee for this library? What would be the total investment, and would this work or not after putting lots of money in this model? And we'll make it from the scratch. For example, we'll rent out a hall, and then we'll put all the furnitures in that, and we'll just take all the cost involved in that, and after that we'll take how much student we can accommodate in that library. So I have I've already made this model before. So I have a library nearby my home. So I have make this model to see would this library work or not in the future. Means is it a sustainable business or not? Okay, so let's make some assumptions for this business. So I'll do the formatting hand to hand in this one. For example, if I just make it some, let's just put some color in this. Okay, I'll always prefer dark blue with white. It looks professional. and assumptions. So whenever we make assumptions in financial model, we have to be very realistic about that. Okay. And whenever we put like hard punch number in this, whenever we type, you have to make that thing in another color. But you have to highlight that thing so that anyone who is seeing this model can know that this thing is not attached to any other cell, and it's just a hard punch a number. Okay, so let's just take some assumptions. First one is total sitting capacity. I'll take 40. 40 is our total sitting capacity. Fees part, we'll see how much fees we can charge. For now, I can take a pretty average fees for this. Okay. The rent part, we can assume the rent part, let's see. Yeah. So it's in a local area, so rent won't be much in this area. So I'll take 25,000 rent for this. Water per day. So let's say there are 40 student. If everyone takes the like, if everyone consume 1 liter water from the library per day, then they will need around 40 liters. So let's say uh yeah, you can take 100 rupees per day water charges on electricity bill. So 40 students, if I take two AC in this, and so it would be around, let's take a rough guess, it would be around 8,000, let's say. Okay, we can change these figures whenever we want. So right now I'm just taking a rough estimation of the cost or the assumptions. Or let's say, yeah, let's say in summer we have 8,000, and in winter we have like I would say 2,000, because there will be no AC in winter. Salaries. Let's say there is only one receptionist in the library, and we have to pay 15,000 for that receptionist. Wi-Fi, let's say you have 2,000 rupees per month for the Wi-Fi. Okay, so we have made assumptions in this part. Let's see. Yeah, let's try to make some model out of this. So for the date part, I have used the formula called date. So you have to just type date, and year is 2025. Month is one, and let's take end of the month result in this. Okay, this one, and after that you can add this formula in this cell. It's called e date. You can take this. The start date is January, and I want to add 1 month in this. So I'll add 1 month in January. It will give you February, and we can drag this to the right. Okay, and let's put some formatting in this as well. I'll use let's use blue. Let's take blue. So I can copy this formatting here. Wow. Let's let me just I have to find the correct date for this. Let's just do the formatting from here. Yeah. Okay. So total revenue, what would be the total revenue? So I can make assumptions in this. For example, in the first month, there would be very less chances that you'll fill all the seats of your library. Okay, but for the sake of simplicity, I'll take I'll take easy assumptions in this. For example, I'm taking that we'll fill all the seats for all the months of of this year. Okay, so revenue would be same per month. Okay, but it's not realistic to have revenue the same revenue every month. For example, there will be a time when we have only 90% our seats fill. There will be a time when there will be 40 seats, and then there will be a time when we have 30 or even lesser than that. So we have to just do this. So now you're seeing that we have some error in this because we haven't freeze this reference. So we have to freeze this by pressing F4 key, and now it will show you the correct figure. Okay, and now you have guessed that cost would be same as well most of the time except electricity. We'll see what we can do for electricity. So rent, we have rent. Okay, we have to. Okay, and then we have water. So we have per day charges for water. So we have to multiply it with. So here also, for example, in January we have 31 days, and we can put formula in this, but just for simplicity, I'm taking 30 as a figure for a month, and we'll take this to the right as same. Okay, but we can make assumption for this, and we can put formula in this as well to make it more uh, concise. For example, in February we have only 28 days. Okay, but just for taking this for simplicity. Okay, and then we have electricity. So for electricity, you can take assumption, for example, that till April, like January to April, you won't use AC, and after April you use AC till September. Okay, so let's take this. So for winter, you will have 2000. Okay, and then for from May, you will have 8000 because of the AC use. Yeah, let's take it till September. Okay, we have to freeze this and take it. Okay, and for you have to take this, freeze this. Okay, so we have this, and now it's Wi-Fi. So it would be same. Let's just take it. Okay, and salary would be same as it is, and we just have to drag this to the right. So now we'll have our total expenses. Okay, so we have this total expenses. Let me just freeze this one as well. Okay, and so let's just increase some space here. I can take 11. Yeah, let's take 10. Hmm. Okay, so these are our expenses, and we have our total revenue. So after minusing your total revenue from revenue minus expenses, you'll have your profits. Okay. And so we are having 9,000 per month profit in this. Now you can assume. Okay, let's take the 2025 forecast. You can just it down. Okay, so this is your so-called income statements. It's very raw. I have made this just to explain how this works. Okay, so now let's take how much we have to put in fixed assets in this business so that we can know how much capital we would need to start this business. Okay, so let's start with furniture per table. Let's assume you'll have 40, you'll have 40 units. You'll have 40 chairs. Let's see, you would need two CCTV in your library. There will be 40, there will be 40 lights in your library, like in your decks. And we have, uh, let's see, we'll assume the fittings and wires cost as per unit of decks. And let's say we have two ACs in the library. Okay. For furniture per table, I would say we would need around, uh, it would cost us 1200. And chair, I would say if we buy chairs in bulk, it would cost us around 1500. For CCTV, I am assuming 5000 per CCTV cost. For lights, I would say, let's assume 100 rupees, or let's say not 100. Yeah, 100 would be good. And for fittings and wire, let's assume 40 rupees per, not 40, let's take 60 rupees per table. AC, let's take like 40,000. Okay. And now let's multiply it so that we can have our total cost. Okay, this is our total cost, and let's do some formatting here. So cost, these numbers are hard funds. So let's give it to this, and you can also, yeah, this, and let's do some border in this. Okay, and now you just have to copy paste this format in your capex assumptions. Let me just do the formatting for this as well. Okay, let's do, okay, now it's looking good. Let's say do some border here. So according to this calculations and assumption, we would need around 2 lakh and 4,400 rupees to start this business, in which you'll earn 1 lakh and 8,000 rupees profit before tax in your business. Okay, this is your assumptions. Now let's do some analysis. Let's do some ratio analysis like total profit. We have total profit here. Okay, now what's the total capital? We have 2 lakh and 4,000 something our total capital. And ROI, let's see, return of investment here. Uh, we'll have we'll have around 50% return on investment in this. And what's your payback period? So it's payback period is a period in which you'll cover all of your capital. Okay, so let's see if I and divide by this. So in like in almost 2 years, I'll get my capital back in this business. Okay, let's see, use number. Okay, so we have identified these ratios. You can do some other ratio analysis as well, but I just want to be concise in this. That's why I have to take this. Uh, so if you just change few metrics in this, you can see how these things will impact your profitability. Let's put these things and put some color in this. Yeah, this is good. Let's put some border also in this. Okay, let's see how our ratio will change if we change some of our assumptions. Let's see if we, instead of going with 1,400 fees, if I just take 1,500, like, okay, so let's see. So now you can see our return on investment has increased from 50% to 76%. Let's take our rent is 22,000 instead of 25,000. Now, for example, on monthly basis also you can see now we are making 16,000 every month, and previously it was 9,000 per month. Okay, now you can see it's 93% return on investment. Okay, so these are things, and if you just want to be a little bit conservative, and let's see, you have around 10,000 rupees of bill in electricity. Whoa, we have made some mistakes here. Yeah, yeah. So let me just do it again. So for some summer, we have assumed that the electricity bill would be high because we'll use AC in summer. So let's do this, and September. Yeah, it's correct now. Yeah, it's fine. Wi-Fi. It's okay. Hmm. So previously it was 8,000. Now we have 10,000. Salary, it's fine. Wi-Fi is fine. Let's take some, instead of going with 1,200, we have to put 1,500 per table. This would be the cost. Okay, so you can do your analysis in this. What would be the cost? So how this model can be built more sophistically would be that you can add in this model different packs. For example, you would have a premium pack in which you'll have this kind of activities, and if you have normal pack, you have those kind of activities. So you can make other uh, fee structure, like different subscription plan for the model, and you can also make some other revenue stream in your library. For example, you can also started renting out some books, or you can also do some services related to the locker. For example, people who are coming to the library sometimes need some locker and all, so you can also provide those services also. You can also incorporate those things in this model. Okay, this is a simple model how things work. For example, according to this model, you can say this business is uh, feasible, and it's sustainable. You can make consistent money, but the total money that you will make in this business would be less. Okay, so you are getting this. For example, you are making 1 lakh rupees, 1.5 lakh rupees from this business, but it's not a significant amount, so very low. But according to the total capital, it's 70% ROI, which is very impressive in terms of that. Okay, so this is our model. So what I'm going to do, I'll try to give this model in the description. You can download this model, and I'll put the model, so you can just play with this. Like if I just increase the capacity. For example, if I increase the size of the decks and accumulate more people in the library, then what would be the thing? For example, right now with the capacity of 40, we are charging 1,500 rupees. Okay, so the room will be same. Okay, the room will be same, so the our cost will remain the same, but we'll get the more fees if I just increase the sitting capacity for our business. For example, instead of 40, let's do 50 sitting capacity, and decrease the fee by 300 rupees. So here you can see what's the difference. You can see what's the difference. Right now we have ROI of 70%, and after doing that we have 70%. So no changes. So if I increase it from, let's say, so here you can see a significant change in this. For example, if I just charge 1,300 rupees and increase the capacity to 50 from 40, then you'll have 97% ROI on your business, and you'll recover all of your capital in just 1 year, which is phenomenal. Okay, so this is how you can stress test. There are other tools in this that you can use. We have different tools in this, so that you can analyze your business. Okay, so that's it for this video. We'll continue this series, and I'll show you how you can make different types of financial model, small businesses model, so that you can use this model in your business and make some um, good decision about your business. So that's it. Thank you so much.